Hey, start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself, then invest in the markets. Hey guys, welcome back to Laptop Trader Channel on YouTube. My name is Philip. I'll be hosting this presentation. Again, I'm here to share my trading experiences and give back to the stock trading community one video at a time. Again, this channel is mainly for new traders or investors, but all are welcome. My goal is to educate you, inform you, and get you up to speed, and to keep you from losing money in trading, and help you understand the markets from a technical point of view. Again, we publish a monthly video, and our goal is to create confidence in yourself by putting the odds in your favor and making the market work for you. If you wish to be updated when new videos are published, hit subscribe now. My email contact is laptoptraderphil@gmail.com. To share this channel, use @laptoptrader on YouTube. This video is for information only and should not be considered investing advice. Caution, trade at your own risk. Most stock day traders lose money. Please protect yourself at all times. Any stock suggestions are up to you to decide if that is appropriate for you. Good luck and God bless. Our July 2026 Laptop Trader Agenda. I'm going to expand on the idea of using average trading range or average daily range and pivots on a chart and when to enter and possibly exit trades. So when we get to the charts, we'll go over that. We'll take a look at or evaluate some of the ideas from last month that I suggested we watch or trade. Having a winning attitude in trading. And then we're going to look at some live charts and review of the market action from June. Okay, so first off, just kind of about your attitude, right? So if I had to start from zero today, right? Zero money, zero experience, no clue, no car, no computer, no phone, no excuses. This is what I would do if I wanted to get into the business of trading. I would get off of my butt, I shouldn't have printed that, sorry, and get an early AM job at McDonald's or wherever I could work at and start making some money, and I would be the first one there. If I was hungry, I would ask if I can have something to eat, or can I eat that rather than throwing it out. No matter what, I would not steal. You will need integrity to be successful, and thieves generally don't have integrity. After that, I would get to a computer with an internet of some kind, or borrow one and start learning how to look at markets and stocks. Maybe I have to walk to a library or ride a bike to a friend's to do so. I would study until I was exhausted and take a nap. Then, when I wake, I would thank God for this opportunity to be in a free country to make my own destiny. In the evening, I would find more work doing something, maybe stocking shelves at a store, or driving rideshare, mowing lawns, or walking cats, or whatever I could to do to start saving my trading capital up so that when I did see an opportunity, I was ready for it. Next day and next week, I would do it again and ignore all the news and the noise and the BS that people try to feed my God-given brain. Once I saved up $1,000, I would figure out how to open my trading brokerage account. By this time, I should have 30 or more days of experience looking at the charts and the market and probably know more about stocks than 95% of most people, including the experts. Because I worked so hard to get to this point, I would not waste this chance to grow my wealth, and I would only take the best trades. I would literally work 80 hours or more per week if I had to, and take off Sunday or one day to recover. On my day off, I would reflect on my progress and my situation, take notes, and try to do something I would enjoy for that day. Maybe swimming, or golf, or cycling, or whatever hobby you would see fit. That night, I would again pray and thank God for another week to chase my dreams, and I would rest for the next step in the marathon of life, and I would be ready to succeed and excel at chasing my goals and my dreams. Remember, there are no excuses. Get rid of them now. When you think like this without excuses, nobody can stop you. There are no excuses in trading. There's only profits and losses. Okay, so get a good attitude if you're going to go about this business. And just tell yourself that you're going to succeed and make it happen. In the end, in trading, you need to win more than you lose. Sounds simple, right? But if you can internalize this with this next exercise, then you can succeed in trading over time, despite your income or your account size or where you came from or any other excuse. The only way this won't work is if you lose more money than you win. And if your ego is so big, you won't try it for yourself. So here's a little exercise that I put together on paper in writing. Didn't take anything fancy, just a pen and some paper. In this study, we used a $1,000 account size and a 10% position size, right? So $100 position size with a $10 stop loss or a 1% stop. We used a 2 to 1 win to loss ratio, or win 20, lose 10 over a series of trades. At the end of the exercise, we are up $200 in total, or up 20% for the account over 4 months. We did not increase our risk or our reward. We went about trading in a methodical, calculated way and beat the market, right? 20% over 4 months is going to beat the market in most years for the whole year. In real dollars, we only made $200, but for the new or small trader, this is huge for their thought process and their psychology, and protects their account from catastrophic losses. Now I know there will be gaps up and down, but by keeping our position size smaller, it should still be a worst case scenario of a 10% loss if a stock goes to zero or out of business. I encourage you to do this study for yourself with your account size and internalize how to put the odds in your favor, right? In this case, guys, we only won 27 out of 58 trades. But because we took our losses, we still had a winning series of trades overall, okay? And in this study, I put together a few times there where we had a series of losing trades, where I put those lines around the numbers, right? At one point we lost, I think it was 5 in a row, right? Another time we won 3 in a row. Another time we had 3 in a row loss. And the last month we had 4 losses in a row. So you can have, and that happens in trading. You'll have a series of wins and losses sometimes like that. So it's a pretty accurate depiction of how trading should work, or how it really works if you follow a plan, okay? Here's another one. In this example, it's a little bit bigger account using a $10,000 account size and only a $200 position size, or a 2% position, and a $20 share size, or a $20 stop loss. So that's 0.2% we're risking in real dollars. And we can see how this would play out if we win less than 50% of our trades, okay? So again, we need to win more money than we lose. So I chose a simple 2 to 1 win ratio of lose 20 and win 40 or more. In months 1 to 3, it plays out as our account grows slowly. In month 4, we hold on for a little larger gain of 50 while maintaining our risk of 20. At the end of month 4, we've grown our account to $10,450 using small risk and calculated wins. Also, we should be better at this in month 4 than in month 1, up 13.5% overall. Not bad, and we have 8 months to go. This approach does have smaller percentage wins and losses, but it protects your account and, more importantly, your psychology. I know that reality is not perfect, and again, there will be gaps up or down on your trades, but do this exercise for yourself and for your account size. In this case, we had a 24 wins out of 52, 24 wins out of 52 trades, right? So again, that's slow and steady wins the race and protects your psychology. Later on, when you get some more experience, you can obviously up your risk, but this should set a good base for your trading, a good foundation if you're a new trader to do this exercise for yourself and for your account size. Okay? Again, caution, you will have losing trades. A good trader has between a 30 and 60% winning average over time. Winning traders know how and when to take losses and how to win and take advantage of market conditions. Be sure when you lose small and try for larger wins. This is one reason why traders look for a tight range candle for an entry. So their risk is smaller and they can place their stop under a small narrow range candle versus a large wide range bar or candle. If you are not able or not willing to do some type of homework or technical analysis or fundamental analysis, I would suggest not investing or trading in individual stocks. I would suggest just buy a total stock market fund or an ETF and go have fun and let your money grow passively over time. Okay, so here are some books that I found very helpful in my journey into the stock market and eventually into trading. There's 4 trading books I thought stood out. Stan Weinstein's Secrets for Profiting in Bull and Bear Markets by Stan Weinstein. Technical Analysis Using Multiple Time Frames by Brian Shannon. How to Make Money in Stocks by William O'Neill, which is probably one of the top books of all time in the subject. Very popular. And a newer one, The Trader's Handbook. Winning Habits and Routines of Successful Traders by a group at Trader Lion, including Richard Moglen, who has his own YouTube channel, Nick Schmidt, Ross Haber, and Amit Rai. And Trader Lion also has a YouTube channel. Very helpful. And then here's some basic investing books that I also found very helpful if you just want to be an investor. One Up on Wall Street by Peter Lynch. Stocks for the Long Run by Jeremy Siegel. Common Stocks and Uncommon Profits and Other Writings by Philip A. Fisher. And another book, more about trading, but I think will highlight both some good points about trading and investing. Market Wizards, Interviews with Top Traders by Jack D. Schweiger, which is kind of a classic book now. He's written some newer ones too, but very interesting how different market wizards look at the market and at risk and reward. Anyway, let's get to some charts here, guys. Here is a chart from June, where I highlighted Sirius XM Holdings, symbol SIRI, and how I felt on the right side of this chart that this company was setting up for a potential move higher, okay? And so that's what I saw on this chart, right? We had this move up. Here we created a pivot, had another move up, created a pivot, move down, created this opportunity, and then we had this tight range of price. And we had a nice volume spike too, okay? So that's what I saw on the chart of Sirius XM. And then I'm going to go forward now in time as to how that played out. So here we have into July. Now where this chart was, in this tight range, especially on a closing basis, and then it kind of moved to the right. It actually gapped down, reversed. That's what that candle there means. So that was a key candle. Then we moved up, broke out of the range, pulled back, and finally it gave us this 3-bar Turner, this buy setup, which then went on a 4-day run to the upside, right? So that's kind of what I saw coming. That's how it played out. Sometimes they work out, sometimes they don't. But you can see I still had the stop loss here at 26.93, okay? So I'll just read through this. As price detectives, we look for as many clues as possible to give us an idea of direction up or down. In general, tight prices or low volatility areas give us a better risk to reward. Price moved up, not down, from this area of price consolidation. So if it would have moved down, it would have stopped us out, but we expected it to move up, and it did move up for a profit. So the strong move up back here creates that pivot and identifies the supply areas, and the move back down to the moving average here where we created these pivots, move down back to this moving average, right, creates the opportunity for a lower risk, higher probability entry. Okay, so that's how I use pivots, and that's how I use consolidation areas or tight price action to time my trades. Okay, so that's all I'm trying to show you guys there. Again, if none of this makes sense, you can keep watching or ask questions. Here we have the same company, only this is a weekly chart. So this was a daily chart, which is my action time frame. That's my action time frame, daily chart. Here's a weekly chart where price went from moving down below the moving average back here. Right here, do you see this purple line, this blue line, these green lines? Price action, or these candles, is moving down below the moving average. Okay, and then it transitions through this period of time. It transitions up, and now price is moving up the right side of the chart above the moving averages. Can you guys see that? Where we're in a downtrend, then the stock went into the sideways trend, or what we call stage one. Then we get this big volume spike on earnings, and price starts transitioning to an uptrend. So as it transitions, we want to catch that at some point in time and look for a high probability entry. Well, that entry is over here during these 3 weeks where price tightened up, in my opinion. And then up here we have this space. See all this white space up here where there's little to no resistance or little to no supply to sell into. Now there's always supply in the market, and there's always demand too. But in this case, where we have this space up here, that signifies to us as traders in technical analysis that there should be very little resistance for price to move up into. In other words, everybody from back here that has sold during this period is probably already sold, right? There's not as much selling taking place because most people by now are out of the stock. And then you see demand come in, see volume spike, volume spike, volume spike, and I know demand's coming in because price is starting to move up. If there wasn't any demand, price would not be moving up. So that's just how we look for price action to signify to us that it's a good time to enter, or a higher probability time to enter with lower risk and potential higher rewards, right? Here again, a series on the daily chart, right, where again, this is the area where I highlighted. It looked like a possible good area to enter, and here you can see on this date here, probably July 7th, which I believe would have been a Tuesday, this stock made a new high. So it went up 4 or 5 days in a row, makes a new high, now it goes back to, it pulls back here through time and price a little bit. So it's just resting. Right now the stock is just resting. And in this case, I wouldn't sell, I'm just holding. Again, I haven't moved my stop up yet, but now in this case, I'm just holding on to these gains, and we're going to see if this can make another move higher based on this longer time frame chart, this weekly chart, right? Because we have this space up here for price to move up into. Again, I'm expecting little to no resistance as more demand takes place for this stock, and that it's going into a new uptrend. Again, here's the weekly chart after the fact, right? I highlighted right in here, it looked like a good idea, and then it moved up on the weekly chart. Again, up here, you can see all this space, right, where there's little to no resistance. There's probably going to be some resistance way back here where these people bought, but at this moment in time, I don't see a whole lot of resistance on this chart. Therefore, I see demand. And when I see demand, I generally take a position, and that's what I did. Here's another chart of the same company, only on a monthly time frame. So on this monthly time frame, you can see, the stage 3, stage 4, the stock sells off in a big way, goes into a stage one, basically a bottoming pattern or a stage one pattern. And then we can see the transition where it starts moving back up on volume. See all the volume down here? A whole lot more green volume and a whole lot more green candles versus over here. A whole lot more red candles, a whole lot of red volume. So this tells me there is demand, at least at this time, for this company. Therefore, I entered a trade in CIRI. Okay. So I hope that helps you guys out using multiple time frame charts, using supply and demand, and just using some common sense. Okay. So let's get to the next one. This is again Robinhood. That is from June, and again we were in a winning position here on this candle that broke out in a big way, up over 8% in a day. I entered here, took advantage of that, made a new high that day. Again, stocks making new highs are much better candidates to go higher than stocks making new lows, so that's why I initiated a trade on Robinhood last month. And now we can see that was at 106.51. Now we can go forward and see where we are at today. This is the same chart here, but this is the monthly chart where I saw, the potential for this stock to move up probably around this 150, 160 area from where it's at this point, 106.51. So that's quite a potential move higher, right? From 106 to 150, that would be a nice gain on this stock. So again, I initiated that trade there. And let's see where we're at now. Now we're at close this week at 111.97. So I'm still holding a gain. Stock made a new high last Friday, but with a topping tail. And this Friday has kind of a wider range red bar. I don't like that, but we're still holding this level, this higher level. When I entered the trade, it was back towards this level, so we're kind of stepping up, right? So this may go higher. It may kind of bounce back and forth for another week or two, but in general, it looks good to me as a trade that I took, and we're long Robinhood stock. Here is the weekly chart going into July, again, where we have the space up here, where I'm expecting little to no real resistance. Again, this stock has transitioned from a downtrend to a sideways trend and back to this uptrend. So I'm expecting this trend to continue, right? So I'm going to follow the trend up and try to profit off of that trend. Again, target in Robinhood somewhere in the 150, 160 area. So that is current open trade. Verizon. This was a little bit different case here where, again, in this case, Verizon sold off after earnings. It is now again setting up on the right side with a potential buy setup. Not all setups work. Use risk control, as I said at the time. This stock has a history of selling off on or after earnings. And you can see that here in Verizon, where you get earnings, it sells off. You get earnings, it goes into sell-off. Here's another case of earnings, and it sold off. And then it goes into this uptrend this year, late last year into this year. And then we had earnings here. It started selling off again, but the candles were smaller. We had some bottoming tail candles. I thought, well, that's could be positive for Verizon. So let's take a look at what happened there. And what really happened was, after the stock was bought up in earnings, again, it sold off. This was where I took that shot here with these, these four candles, and then later that month in June, it really sold off a lot harder. It actually retraced from the top here back down to this area about 95%, and that's never a good thing. And this wide range candle confirmed that Verizon is just not ready, and it still needs time to cook. Okay, but as my notes say, the large wide range bar red candle right here and the 95% retracement in price tells me not to buy at this time. This stock is just not ready. It needs more time to cook. We let price tell us when to buy, regardless of what news or fundamentals suggest, right? In general, we don't buy weakness. or the volatility of that wide range bar. Now you could argue Verizon is on sale, but what if you buy it and it becomes more on sale at 30 bucks instead of 42, right? Remember, we are investing in trading. We're not shopping for green beans. We are buying assets we want to go up in value, right? That's an important thing to understand in the markets. We're not buying stuff on sale at the grocery store. We're buying assets we want to go up in value. So when stocks keep going down in value, it's not a good buy at this time. And that's all I'm trying to show you guys there. So Verizon just did not work out. And here's where it's at today. Not only did it put in that wide range bar, but now it looks like in July the selling continues. We still have more red volume coming into the stock. It just looks like Verizon simply can't get out of its own way. And this consolidation here looked pretty good. And this new high looked pretty good, but then it just gave it all back. So I never did enter a trade in Verizon. It never triggered for me. If I would have entered, it would have probably triggered somewhere over this area, right, over these green candles, over this long-term moving average, this purple line, maybe even over this $49 area. But when this candle came in on this daily chart and price broke these support areas, ending the short-term potential move higher in Verizon stock. So I've got this marked off here as a potential support area or a demand area. Another potential support area here. And then this other support area. When this candle formed, see that? That wide range red candle after this green candle? And it gapped down and closed like that. For me, that was the end of the opportunity. I never did enter Verizon. So that one day was the key candle in the sequence that said, nope, this is just not a good trade to take. Cardinal Health, making new highs, gave us a buy setup in June. You can see that there where we had a new high, pulls back, puts in this bottoming tail doji candle, and then you have this igniting green wide range candle. You know, you buy over this one or you buy over this candle here, or you go down to a daily chart and you find an area to buy. But Cardinal making new highs gave us a buy setup on the monthly chart. And again, on the daily chart, we're making new highs, right? I mean, this is still a monthly chart, I'm sorry. But here's my stops. Yellow lines are my stops. The thing about stocks making new highs, you have to understand this too about the markets. So Cardinal Health has moved up to new highs in blue skies, right? No one at this time is holding a loss. No, there's no reason to sell, and there's little to no supply or resistance. Think about that. Even if you bought at the top of the green candle just before it makes a new high, you're still not holding the loss. Anybody to the left here that bought during this entire 5-year period is not holding a loss. Even the guys that bought on these red candles, right? Nobody is holding a loss right now on a new high. So when you have stocks making new highs in blue skies, there really is no reason to sell the stock unless you're a short-term trader. And the market isn't really controlled by short-term traders. It's controlled by institutions and long-term investors. And institutions just simply don't sell stocks making new highs, right? And this is a major company. So that's why I got involved in Verizon. It still looks good. We still have space, right? New highs equals space, and space equals higher, in general, higher moves until something changes, right? Until something changes. And we'll know when it changes because we'll see that in an earnings report or we'll see that in the charts, right? But right now, you know, Cardinal Health is a Wall Street favorite. We had this 3-bar term buy setup. And here's what it looks like on a weekly chart, right? So we bought here in this transition, put our stop here, and we've got a profit currently in Cardinal Health. Pretty simple. Let's move on to another one. Rackspace Technology, symbol RXT, stage 4 downtrend, stage 1 base, pretty tight price action. It looks like it's going to transition out of that base, right? On volume and moving up the right side of the chart. So what did I do? I look for an entry in Rackspace. Here I took this screenshot on July 5th, where it was up 2 months in a row, started pulling back here in July, and here we had closing breakout to new highs on June 17th, which was here, and Rackspace was up over 21% in a day. So I had a winning position in Rackspace. Well, then later on down the road, in July, it stopped me out here on this day. In fact, not on Friday, but the day before yesterday, on Thursday, we had this wide range bar, selling entered the stock, and it stopped me out. No big deal, right? So it looked good. I saw this price contraction pattern. That's why I entered, and it looked like it was going to keep going up, and then it just reversed and stopped me out. So that happens, guys. Professional traders and serious traders take losses, and there's no way to predict that a stock that looks like it's going higher and then puts in this nasty day. There's no way to predict that. You just have to think ahead of time and prepare for it with position size, stop losses, and just get your psychology ready to take a loss. It's going to happen. Here's another one, Spectrum Brands Holdings. This was another losing trade where I entered on a green reversal day here, where this purple dot is. That's the day I entered. And I stopped out 4 days later here on a gap down where price was moving up. I had a winning position, and then on that fourth or fifth day, I think it was 4 days later, the stock simply gapped down out of nowhere. There was no earnings report. There was nothing I could find, but you just have to accept that happens in individual stocks. They're volatile, and that's what happens. So you just have to say to yourself, so what? It stopped me out, next trade, right? That's the mentality you have to have if you're going to deal with individual stocks. And so now, after that happened to me here, right, it stops me out here. The very next day, it reverses higher back up into that level, okay? And now we have a new higher level or a box forming to the right side at these pivot areas, right, with a new daily high right here on this candle after a gap up and a reversal day. So we had this reversal day, gap up into this area, and we've held this range here for 7 days. Even though Friday was a red day, so far we've held that box. Price is tightened up inside that box. A move higher outside of that box will confirm our assumptions. A move down will also confirm any weakness. So now we're just watching. Does the stock have the demand? Does it have the institutional support for this to move higher up over this area, or does it not have the support and price is going to move down out of that box? I don't know. It's a 50-50 bet. Place your bets now, and we'll see what happens. If it moves higher, I'd probably buy it. If it moves lower, I'll just put it back on the watch list. It's already stopped me out once, so we'll see what happens. But that was another possible idea from the previous month that did not work out. Again, that one stopped me out. Here's the monthly chart and why I took the trade, because we had this the sell-off stage 4 from late 24 into 2025, and then we went into stage 1 base, and then we started moving up the right side, right? So I'm thinking, okay, this looks like it has the potential to go from this $82, $83 area back up to $100. So that would be a decent trade, but it stopped me out so far. Here's where we're at now on the daily chart, and it did not hold that box. It actually moved down out of that box, and on Thursday and Friday it put in a little bit of a buy setup, but I don't have a lot of confidence in this stock. So it just looks like it's going to have this larger range up here, and it may move back up to this pivot area. It may not. We'll see what happens. But right now it's just back on my watch list, not one of my top candidates at this time. So before I say in closing, before we get to the live charts, Again, thanks for liking, sharing, and subscribing to this informative channel. Again, best of luck to you in your trading. Again, my email contact laptoptraderphil@gmail.com or my handle @laptoptrader on YouTube. So let's get to some market overview for the month, okay? And we'll get to, we'll just go over some of these stocks here real quick. We'll go over the market. We'll get to, let's get to, yeah, here's the SPY, okay? So here's a monthly chart. We can see this is pretty bullish still in the SPY. All the moving averages are pointing up. We had the SPY set up in the SPY back in March of this year. Then April took off, and we've just been kind of going sideways for 2 months into July. Closing in May of this year, closed at 756. Closed in June at 746. And then so far this month, it's closed up at 754. So we're just kind of going back and forth. We're consolidating over time. That's pretty bullish. Similar picture in the Qs. Again, bullish. Made a new high in June. Is slowly pulling back in July. So that still looks overall like a bullish stock market. So if you have bought and held the market, keep holding because it looks good. And the best part about this market is the Dow Jones Industrials have had a nice run this year. So that shows that there's not only participation in the market from large cap companies in the SPY and tech companies in the NASDAQ, but also industrial stocks, also smaller cap stocks making new highs in June and July. So that looks good for that, the Russell 2000 index. And the transports have also been making new highs over the past 3 months. So our top 5 indexes we watch all are very still bullish. And so in that case, we just take the attitude of innocent until proven guilty, right? So we continue to look for trading opportunities in this environment. ACB doesn't look good. NASDAQ company is in this period of time where the market's been moving up, the NASDAQ stock has been moving down. It's reversing here in July in a strong way, but still a stock that has been in a downtrend. So that's not a great idea. That's not a great idea. Open company I like a lot for this reason. Again, using technical analysis. Nice move up. Creates this pivot in September of last year, in October of last year. Pulls back, right? So we start looking for an opportunity here where we have these tight price ranges. Look at those closing prices over these last 5-6 months. All within just a percentage of each other, okay? And when we look for an opportunity, at least in my trading plan, I go down to a daily chart and I start looking, right? So what do we have here? This looks like kind of a mess, right, on a daily chart. Well, when you look at a monthly chart and you compress the data and you look at these closing prices, and you see they're all within pennies of each other, that tells a different story than this daily chart. But if we were to put a line across these prices over this period of time, let's say right through there, right through all these closing prices here, we're just within a point, a percentage of where closing prices have been. And so the stock just isn't moving right now. And I don't like these sell-offs. We have the sell-off here. We've got the strong sell-off here. Then it moves up. And it looks like, okay, maybe now it's getting ready to pop. It does pop on Thursday, but then gets sold off pretty hard on Friday. It sold off 10% on Friday. So this is another one that, I've traded back and forth. It stopped me out a few times, but just can't get out of its own way. So that's not a great idea, even though I'll continue to watch it. What really needs to happen with the stock is price needs to tighten up on this daily chart up here somewhere. Around the $5.50 to $6 area. Look more like this, where we get some tighter price action versus these wide, range candles where it's up one day, gives it all back the next. That's just not good. Not good for the mark. Not good for that stock or for my psychology. But on a monthly chart, it still looks like a pretty decent opportunity or potential opportunity going forward. So that will stay on my watch list. Green Plains Inc., another one that had a sell-off from back here, and now is kind of transitioned on this right side, closing pretty tight here over the last 3-4 months. And when we look at the daily chart on this one, we look at a little bit different picture than the last company, where this has actually transitioned here on the daily chart. Looks like it's moving up the right side of the daily chart. And I like these last 3-4 days where it popped up, went sideways. This looks like it can move from where it closed Friday at 1689 to probably 1850, 1860. So that's a potential idea on a short-term trade for that one. Symbol GPRE. Again, this is just what I do to find ideas. SoFi, again, looks like it's transitioning from this uptrend, goes back to this downtrend, and I was trying to transition again back to an uptrend. So that's an idea. Tilray, no. Gilead Sciences is a maybe. Still on my watch list. This looks like it made a move up. The best place for Gilead was right here, really, back in October of last year. That was a nice move up in Gilead, but since then it's made this pivot, pulling back. This could give us an opportunity from, maybe the 135 area up to 158. VFF, I would say no, that's still kind of a downtrend. Roku is getting bought out by Fox, so that is basically not trading right now. So that's no. Iran is very wide ranges on those candles. That's a monthly chart. That's huge candles for a monthly chart. So I'd say no to that. I'm looking for tight candles. I'm looking for narrow price ranges or consolidations. No, I don't like that one. Baidu, no, not yet. Boring Company looked promising until May and June. It sold off, so no. Now we're going to have internet issues. So Plug Power, more of a stage 1. It trades a lot of volume for this company. It's only $2.23 a shares. It trades a lot of volume. 51 million shares. All-time low was back here, where it closed at 88 cents in May of last year. Now it's trading at 223, so that's moved up a little bit from that all-time low. And problem with this stock, it has negative earnings per share. It's not growing earnings very well, but that could pop up. Maybe they get a good earnings report over the next 6 months. Maybe that creates a possibility for Plug Power, but right now it's still on a watch. KeyCorp, I am in, based on the fact that we came over this pivot here, and we have almost come over this pivot here. This high was 23.34. We closed this week at 23.30. So this will be interesting on this one. KeyCorp, if it gets over 23.34 and holds, closes over that for a couple days, that has the potential, in my opinion, to go up from that 23.34 area all the way back up to these highs over 26, 27 bucks. So that would be a decent trade. If you get a decent risk to reward on that, maybe less than $1, maybe 75 cents, and you could go from 23.30 up to maybe 27. That'd be a nice risk to reward on that one. So that's why I'm in KeyCorp. Brookfield, no. Stinger Tankers is a possibility with this reversal up in July. This is a oil tanker company. I don't know why that would all of a sudden pop up like that, but that's a possibility. If that starts making new highs, that could go up to $100 or more. So that's one to watch. XLP, the consumer staples sector, looked promising back in January, February of this year and just gave it all back. Just did not hold that area. And since then, it's been going sideways for the last 4 months. So maybe that will improve going forward. That would be a watch. Healthcare has broken out to new highs in June and July, which is why I am in Cardinal Health. And also biotechs have been doing pretty good too. Exo is not trading. CoreWeave, I don't like where that's at now. Although it's a tight candle so far in July, I would need some more evidence to trade that one. UFO is a space company ETF that sold off hard after the SpaceX IPO. So that is going to be damaged. That needs to do some repair. Needs some time to cook on that one. VRT looks pretty good right now. Again, made new highs in May, sideways in June, and now July. You know, if that can get moving up the right side, that's a possibility. VRT. Life Stance Health Group, LFST, is one I like. I'm in based on the this consolidation for years. Then igniting candle after volume in May and June. And that looks like that's starting to move up the right side. Big void in here. This has a lot of potential, right? Even if it went from here, even if it went halfway up the chart, it got to $20, that'd be 100% gain almost. You know, that would be. That's why I'm in that one. That's got some potential to it. Will it make it up there or not? Nobody knows, but it's got the potential, and it's got a void, and it looks like demand is coming in for the stock. And it trades a good amount of volume, over 3 million shares, so I like that. Outfront Media made a new high in May, kind of went sideways in June, and if that starts moving up the right side here, again, that's blue skies for Outfront Media, symbol OUT, so I like that one going forward. Fastly had a pretty long period of consolidation, moved up, created a pivot, has moved back. This may be an opportunity for Fastly, to start transitioning back to an uptrend here. Let's take a look at a daily chart of Fastly, see if we see any evidence of that. Yeah, there's a little bit of evidence that Fastly has some demand. It's still below this long-term moving average. I don't like that. We had this gap down after earnings. I don't like that. I would say of Fastly, let's wait and see on that till that next earnings report. See if something comes out that is a catalyst for Fastly to start maybe appreciating in price again. But so for me, that would be a watch. This stock is not good. MBIS is a little bit extended or overbought, in my opinion, to the upside. I would wait on that. That's a watch. Enphase, bottoming pattern. I think that one stopped me out, so that's a watch. Circle Internet Group, trading below all the moving averages. This was an IPO, or a new public company, back in January last year. Went up, got pumped, and dumped. And it's still basically in a downtrend, so no. This is a Oruka Therapeutics. This is basically a biotech stock. If you see that word, if you see the word bio, the word biotech, the word therapeutics, or if it has an X at the end of the name of the stock or the symbol, just be careful, because that's most likely a biotech stock, and they are known for being very volatile, and they're also known for not making any money. You can trade them, but be careful. This one, I took profits somewhere up here and got out of that, so that was a win for me, but I don't hold these biotechs for long periods of time. But let's look at this chart too. So this had a move up, created this pivot, had a move down, right? Consolidated for months, and it came up and started consolidating again. So this shows us that there's demand for the stock, at least from this point, right? And then once it gets over these pivots create that resistance area, and then you can see when we had this nice month in March of 2026, and then we broke out above everything. And again, this started making new highs. And when it does that, people jump on board because there's little to no resistance to the upside. And this was up over 62% in June of this year. So congratulations if you were in that. If not, I would not buy that right now. It's just pretty extended up. Intel Corp, again, extended. Semiconductor stock, selling off in July. Actually, big reversal candle in July. That's a big sign to sell, or to at the very least raise your stop, right? If you bought back here, you'd want to raise your stop somewhere up here under this candle or under this candle, because that's a sign right there that a big wide range red candle, that reversal, that 180-degree reversal, is a big sign that sellers are doing more than just taking profits in Intel. Lunar Company, another space stock, not doing good right now, so that's on the watch list. This is an AI stock, again on the watch list. Creative Realities, on the watch list, kind of popped up and sold off so far in July. MD is one I am currently in because, again, the pattern told me to get in back here on this gap up. And that created a pivot, goes to the selling period or this period, and then we're above that pivot again here on a closing basis. This was up 17% in June and already up 3.71% in July with what? Room to move up into. Little to no resistance up the right side of the chart. So that is why I'm in MD. Tron, no, not ready. RLMD, another therapeutic stock, kind of starting to move up the right side, but we'll see if that can continue. It's got a big void up here, or big area to move up into, but again, these stocks simply don't make money. They're just a gamble, but sometimes a gamble pays off, sometimes it doesn't. Satellogic, that's a space stock, sold off. Another one sold off hard after the SpaceX IPO. Apollo Real Estate looked good here. That it sold off, so that tells me that needs time to cook. Look at that volume too, coming in that. So people are just not holding on to that. Firefly, another aerospace stock that sold off hard here after the SpaceX IPO, so that needs more time to cook. RingCentral, I have a small position in that. It's just consolidating. So this was up 7.6% in May, down 10% in June, and already in July up another 7%. So it's just kind of doing that back and forth, and we can see that on a daily chart where it kind of moves up, crashes and burns and comes back up, and then I get back in it. We'll see what happens if this can maintain some kind of upside momentum. But yeah, I am in RingCentral right now, more for a reason of technicals, yes, on this chart, on this long-term chart, but they are profitable. They do make money, and they're growing earnings, but it's like everybody has a Ring doorbell, So that's why I'm in that, because Ring seems to have stuck with the consumer. It seems like consumers and homeowners really like the product and the service. So as long as people keep buying them, paying for their service, I like RingCentral going forward. Figure Technology, no, that stopped me out. Baker Hughes, which is like an oil service company, made new highs, is pulling back. It looks like it could possibly give us a buy setup on the monthly chart. We'll see if that plays out, but that is a possible idea going forward. Not a big oil stock guy. Wolf stopped me out. Looked like it was moving up the right side. It did stop me out. That has to prove to me it can get back in an uptrend. Netflix looks terrible. Still in a major downtrend, right? While the markets are moving up. So big relative weakness in Netflix. Like the company, believed in the company for a long time, but over the last year, it has not been good for Netflix from an investor's point of view. So that's where we're at with Netflix. This one stopped me out. It looked like it was going to be moving up the right side, and then it stopped me out. Back on the watch list. Another space stock. Needs more time to cook. LRN. I really like the company. I like the fundamentals, but there has not been the demand for this stock that I thought it would have. This has to prove to me that there is demand for it before I get back in it. But this big red bar here was just came out of nowhere. Here was earnings. Once it goes through this cycle, makes a new high. It does this deal. Looks like it's going to go higher, and then has a huge down day, over a 14.5% down day, and that just that really hurt that stock bad. That's going to take probably another month or more to correct and get back before people start buying that again. No to this one. That's a downtrend. Lithium Argentina I liked, and that's could possibly set up a buy setup here this month. We'll have to wait and see if this gives us maybe a bottoming tail candle here, and then in August, something starts moving to the right. But here's the pivot point right here, the IPO price of $8.79. Right, so we get over $8.79. I like it, but right now we're at $7.33. So let's say $8.80 or higher. I like that one. Here's another lithium company. Started to move up the right side, but then has sold off for the past 2 months. So that's a possibility, but that's on the watch list. Sezzle, this has been a big winning trade for me. It's getting extended here up towards this previous pivot high of 186.74. Closed the week at 179.38. So this is either going to, break out over this area to new all-time highs, or it's probably most likely going to pull back to some degree and then make another run. This stock probably needs time to rest, but very popular company, symbol SEZL, but it's in a weird spot right now where it's right towards this high point. Oftentimes stocks will sell off again on a technical basis where they sold off from before. It's just you're hoping that it doesn't sell off 100%, right? Come back down here. You're thinking it pulls back 30% or 25% or something, and then gives you another chance to buy more. That's what you're hoping for. That has been a good trade. Sezzle, I'm still holding that one. Chronoscale looked good until it stopped me out, so that one is back on the watch list. This one, stopped me out here on this pullback. But then it started moving up for the next 5 days. So that happens, I may get back in, but I'll need some more proof before I do. So again, I like to start with just regular stocks that came up through some sort of watch list or some sort of notification that I follow. And then I start watching them, and then I enter when I feel, or the chart tells me the time is right to enter. So Mercury has been one of the best space stocks to own because it did not have nearly the sell-off that the others had after SpaceX. Now, it has started to sell off here in July. It's already sold off over 11% in July, but it made a new high during and after the SpaceX IPO. So this one had some relative strength. And the good part about this one is it earns money. This is a company that held on to the gains through the SpaceX IPO. It is pulling back right now, but for me that's a hold. And if it pulls back and gives me some sort of buy setup over here, I would add to Mercury Systems, symbol MRCY. That's probably one of my favorite space stocks right now because it seems to have a lot going for it. Right, it's profitable. It's in an uptrend. It had some relative strength after that SpaceX IPO, so I like that, which indicates to me that Wall Street likes it too. OII is one that stopped me out, then I got back in, and now it's making new highs again. So this one has been pretty positive for as far as the trade goes. Oceaneering International. The quantum stocks were doing good until this month. They've started selling off, and this ETF symbol QTUM is a pretty good ETF if you want to get involved in that industry of quantum computing because it you spread your risk out over a bundle of stocks. But right now, it's on a watch. It's pulling back. Needs to. I need to see some evidence of where it's going to stop pulling back to, and then make a decision if I want to buy more of that ETF. Uber has had some relative weakness versus the market, but I like Uber. It's the big player in the space of rideshare, and they've got a lot of technology going for them too. So maybe they're talking about self-driving taxis or whatever, but it looks to me like it's in a possible transitionary period here where we've got these tight closing prices, right, of 71.93, 74.61, then 70.40, 72.16, and now 74.54 this week. So it just looks to me like it's priming itself to transition higher. And that's why I'm in Uber at this time in a small way. But it's got some nice attributes that, even though it sold off after earnings, recently it's gapped up, pulled back to that gap area, then had an igniting bar here on June 24th, made a new, higher low, higher high type of deal, and then pulled back. It's been sideways for about a week to 10 days. Gapped up on Friday, left a red bar, but if that can start moving up this right side, I like Uber going forward over $78. So that looks pretty good to me. Again, remember, just because the stock's in a downtrend doesn't mean we don't watch it. Because this was an uptrend in 2025, made a new high, creates that pivot up there, and then this pullback is what gives us that opportunity to get a good price on a stock. Again, AI stocks haven't been doing good the last couple months. Not good. Quantum computing stocks also selling off. IonQ selling off. This one made a new high and then sold off, so that kind of stopped me out. Another quantum stock stopped me out. AirJoule Technologies had a nice move up on volume and then stopped me out, so this is back on the watch list. Missile is an ETF that stopped me out. That doesn't look that good. Zoom is one that symbol ZM. Big fan of the company. I like Zoom because it has growing profits and it has growing revenues and earnings. And from this all-time low and close at 69.08, low of 55, it's now at 89.76. So it doesn't look like much on this monthly chart, but it is slowly but steadily moving up the right side. And I like that about Zoom. And if more investors start buying Zoom, that's probably going to push the price up. The other thing I like about Zoom, it was a pandemic hero and winner and all that. This has this all-time high back here, 5-year high of 406.48, so just over $406. Now, I don't think Zoom's getting back to 406 in the near future, but could it get to $100 or $130? Yeah, why not? It's got growing earnings, so I think there's a lot of catalysts to Zoom. That Zoom's stuck. I think people like working from home, even if it's 1 or 2 or 3 days a week. And I think it's just one of those convenience things that has stuck with us. People are still using Zoom, and so I like the company for that reason. I like the chart. So I do have a small position in Zoom at this time. Interactive Brokers looks really good, making new highs, along with Hood, same industry, making new highs. So those two I really like as far as online stockbrokers, Interactive Brokers, and Hood. Here's the smaller company, GitLab, made an all-time low here and started moving up the right side. And they do have earnings, so I tried to get in early here. It's up. It was down just 1.6% in June, but up 6% in July. So this looks like this is starting to possibly, at least on a daily chart, move up the right side of the chart. And you can see here's a low point, higher high, higher low. This high here created this pivot, and over 34.06, I like this company. I had a bad day Friday, down over 4% on Friday, but like I said, over this 3406, this pivot, I like that going forward as an early, very early entry. Trying to get involved early on that stock. Rigetti, yeah, that's still selling off. Quantum computing stock. Atlassian looked good until it didn't, so that was a bottoming pattern I tried, didn't work. I tried that bottoming pattern based on all this volume down here, and I believe it had a good earnings report on that one, but I stopped out, so that goes back on the watch list. This one has been a very good one for me over the past couple months, and the reason I like this one, even though it's not a tech stock, but we can see here where we had this move up, created this pivot. We had this price action right through here that confirmed that pivot because this became support, right, igniting bar. Then we went through this corrective period, okay. We had this pivot up here, and then we get this igniting bar here in May. This was up 23.39% in May. So I got involved after that. When I seen that, I was like, that looks good. Let's come back up these pivots in a strong way. Got involved over that bar, and I'm showing I believe about a 20% profit so far in Lifetime Group Holdings. And again, it's not a tech stock. All this is they own fitness centers. I think they're nationwide fitness center company, so they're doing good. GeoPark for me is just on a watch right now after this big sell-off in June. Again, Cardinal Health I'm involved in because it's making new highs and it's a healthcare. And healthcare stocks have been doing pretty good last month or two. Spectrum Brands. This one stopped me out, but it looks like it could continue up the right side, possibly up towards $100. Closed Friday at 83.31, so that's a possibility. Rackspace looked good, and this did stop me out this week. Yeah, this stopped me out on Thursday. Right, so it kind of looked good here. Stopped me out on this wide range bar down 33.5% in a day. So it's just crazy. Everything could look great, and then you get that. And then on Friday, it was up over 22%. So we'll see what happens with that. That's back on the watch list. What else? Siri, I've already shared that with you. I like Siri going forward. So if I'm going too fast for you, you can maybe stop and pause this. But again, Siri on a monthly basis, stage 1 looks like it's transitioning into an early uptrend stage 2. This is, again, if you see this word too, Amylyx, I think I'm pronouncing that right, Amylyx Pharmaceuticals, symbol AMLX. Well, it's really not a pharmaceutical company, it's more of a biotech. That's how it's listed too. Amylyx Pharmaceuticals is a clinical stage pharmaceutical company. It focuses on developing novel therapeutics for different diseases, and it's based in Cambridge, and they're known in Cambridge for biotech and pharmaceutical research. So, again, it's basically a pharmaceutical biotech that is starting to move up the right side. Again, most of these companies in the biotech space and the therapeutic space, and even in the medical marijuana space and the pharmaceutical space, do not make money. So be very cautious if you get involved with these companies, because they can go, up 100% one day and down, right back down the next. They're just not very stable companies. I will still trade them, but I really do not look at them as long-term investments unless it's a very large company like maybe like Biogen or Amgen or something like that. A company with some real size and a real history of being successful. DHT, again, looks to me like it's made the turn up here in July, so I'm involved in that stock. Okta is starting to move up the right side again on a monthly chart, but it looks a little extended on a daily chart. So, yeah, see it's starting to pull back from this high point. So that needs to probably correct over, probably this week, and then maybe set up for some sort of buy setup here going into this week and into the rest of July. So that looks pretty positive going forward on that one. House looked good, and then it's completely reversed in July. Down 30%, up 35% in June, and down 30% in July. So it's pretty hard to make money like that. So that's on a watch. Paysign, I'm in. This one I'm pretty excited about because it is on a growth trajectory. They make money. They're in the payment space, and payments have been looking pretty good this year. So I like that. I'll show you a watch list about that too when it comes to payments. Here's a genomics company, which again is not profitable, but it's starting to move up the right side of the chart. Has quite a bit of volume too. So this tells me institutions are watching it. We get $42 a share times 2 to 3 million shares a day. That's pretty good volume, dollar volume. So I am long 10x Genomics. Unusual Machines, no, stop me out. And Porch, I like. Porch is starting to kind of make this move up towards this previous pivot. And again, if it gets up over that area with some momentum, we've got a space or a vacuum area there to move into. So let's look at an area of the market that I found that excuse me, is in general, the companies within this what I call the payments industry is starting to move up, and we can see this pretty clearly not only through fundamental view, but performance. Okay, and let's just look at a 1 month change, and you see Sezzle, right, which I mentioned earlier in the video, up 48% a month. Dave, up 47% a month. Shift for Payments, symbol 4, up 42%, and Paysign up 30%. So that's why I really like Sezzle. Which I said I'm in. Dave is at a real nice move up. That's a newer financial company. Right, moving up the right side was not a cheap stock, $400 a share, but moving up the right side. Shift for Payments, symbol 4, and more of a bottoming pattern, but sometimes a rising tide lifts all ships type of trade. I wouldn't necessarily trade that right now, but it was up 9% in June and starting to move up already 4% in July. So that looks like if that gets going, that's a possible idea. Smaller company, Paysign, making new highs, so that's always a positive sign. ACI Worldwide, again, another one making moves up the right side. Now, when I look at an industry, I look at a couple different things. Yeah, I look at the chart, but I also like to look at the fundamentals in these industries too. So I'll show you a quick way to do that. Just go to payments. We go not to performance view, but we can go to fundamental view. And I like to sort these by market cap. When I sort it by market cap, that shows me who are the biggest and strongest players in any industry. So at the top of the industry, you've got Visa, MasterCard, Capital One. Discover is now part of Capital One. That doesn't trade anymore. It's part of Capital One. Block, PayPal, etc. Paychex, SoFi, and then down the list. Well, when I look at that, I always like to look at not only the size of the company, but I also like to look at this this column right here, this net income column, because what good is it if a company's huge and it's got all this business, but it doesn't make money? You know what I'm saying? So net income, I think, is a big deal. And the biggest company in the industry makes the most money. So that's good. Right, then MasterCard is a little bit smaller, makes a little bit less money as far as net income. Then you got Capital One. There's a big drop down from the two top companies to Capital One. It still makes $2.5 billion a year. And then, they've combined with Discover, which makes this about a $7 billion company now. Even though those two companies are together and they're huge, they're still only half the size of MasterCard. So, that just shows you how big these companies really are. Block is about a $1.3 billion company based on net income. PayPal, I was surprised that PayPal makes that much, over $5 billion a year just in PayPal. So that's pretty good. And then you got the other ones, Paychex. SoFi is kind of a new player in the space. They make $481 million a year. Paycom, then Paylocity, and then even newer is Sezzle. So Sezzle is profitable. They made $133 million, but they're still a smaller player in the space, but they're growing. So that's what I like about that idea as far as a stock, and we can look at that real quick. We can look at some numbers on Sezzle. And again, the chart looks pretty good. It trades a good amount of volume, over 1 million shares a day in volume on average. It's got a positive weighted alpha. I've discussed what that is before. That's just kind of a indicator of strength. It's got a $5 billion market cap. It has annual income. It's got a price to sales of a fairly low price to sales ratio of 3. Price to cash flow of 16. That's not crazy out of line. What other fundamentals can we look at? It's got a PE of 23, over 23, so that's kind of starting to get up there. It has earnings per share, which is good. It had most recent earnings of 61 cents, and it has a new, the next earnings date is August 6th, so that'll be a key date for this company, right? I think I'm looking at I am looking at the wrong thing. I just noticed that. Let me go to Sezzle. I don't know why I clicked on that. SEZL. This is the one I wanted to look at. So it's had a very strong move up the right side of the chart. Again, I'm very sorry about that. But this has a $6 billion market cap, annual sales, annual income. It's got a price to sales rate of 13, kind of a high cash flow. It has earnings per share, again, earnings on each 6. But this stock has a lot of growth to it, and that's why I like it. It's got an average estimate coming up of 95 cents, and it's on a growth rate of 37%. It's outperforming its peers, right? So this is up over 3 months of 200%. And, other more established companies are up double digits, right? Visa up 14%, Copay up 16%, MasterCard up 5%. And if we look at some other stats on this, we could look at some of the numbers on this. Key stats. That's what I wanted to get to. This is another page I like about bar chart. These key stats, right? You get ratios. You get return on equity. Here's a big number. 87% return on equity. Well, in general, over 20% is huge. Return on assets, over 36%. Profit margins, double-digit profit margins. Low debt, a fair price to sales ratio. Kind of high cash flow ratio. Price to book, I don't pay much attention to. And then we see that these financials are pretty good, right? Last quarter net income, 51 million. Last quarter sales, 135 million. Annual sales, and the stock's growing, right? It's growing 1 year, 20%. 5-year revenue growth, high triple digits, right? 665% revenue. So they are growing. People like their products. Per share information, earnings per share growth, double digits. Earning per share growth versus previous year, 43%. So this is a stock that's on a growth track, and It's not going to pay dividends yet because they probably don't have the money to. But I think that information, that funnel information, is translating into the chart. It's on this trajectory higher. It was an IPO in 2023, and in 1 year you could see, we had this pivot here, gap down, went through this corrective period, and now it's the stock is moving up the right side of the chart. So that's what I like about that company, Sezzle. So anyway, I think I'm gonna end the video there. That's probably too long as it is, and I hope that gave you an idea of the markets, stuff I've been watching. And if there's anything else you guys would like me to review, just send me an email, right? Anyway, in closing, thanks for liking, sharing, and subscribing to this channel. Best of luck to you. See you next month. Again, laptoptraderphil@gmail.com or @laptoptrader on YouTube. See you next month. Bye.